Good morning, everyone. It is January 6th. It is a Wednesday, and we've got some interesting things to discuss today. So I want to get right to it as quickly as we can. But first, this is Nadex Morning Analysis. My name is Todd Rich. I'm with Nadex. With me is Brian Caprice from Keep Trading Simple. Before Brian and I talk about some interesting things in the markets, probably gold as well as US indices, I think that'll be the topics for the day. I do need to share that trading involves risk and may not be appropriate for everyone, and that any trading decisions you make are solely at your responsibility and at your own risk. Lastly, I really want to point out that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right, now that we got that out of the way, it just changes the format when I do that. I think, we've got the election results coming in, and I think people are starting to digest what it could mean for the markets, particularly if the Senate goes 50-50 with the Democrats then having the vice president to make the deciding vote. It's definitely impacting the markets. Let's first start with gold, and we also had some unemployment numbers. I think let's start there.
Yeah, so gold is kind of an interesting story right now. Obviously, the election is weighing on things heavily right now. As you said, there's one seat I think is official. The second one is they haven't said it's official, but I think at least in the overnight, all foreign markets basically were under the assumption that Georgia has been completely flipped. Again, some news early this morning. Obviously, the unemployment data. It's interesting. It's truly a bet for gold right now. It's getting absolutely just crazy. And there's other headlines out that we got about 45 minutes ago that were actually expected to see some deflation inside of in Germany, which again is one of the driving factors of the European Union. So, while gold is like, the Democrats are in, we're going to definitely get more stimulus. That's what they said was going to happen. Dollar weakening, we're seeing deflation in other places as well. So it's an interesting battleground. I mean, going back and forth, looking at kind of where we're at with gold right now. This is the same 30-minute chart we've used for the last 2 days in a row. And we've mentioned this level, I think, 2 days in a row. Actually, longer than that. We mentioned it last week, this 1895. You can see early morning today, we, let's see, what time, get the exact time on this one so I don't misquote it. About 5:30 this morning, we ended up hitting that level and then just completely tanked off that level. And again, this is kind of one of those, gold should be long, get short. It drops very, very fast in an emotional sense. It has a small level here to bounce off of. And if you guys remember, I was talking about a knockout bracket earlier this week. Well, here is the knockout bracket. The 1 to 3 was tagged this morning off of that one. So hopefully, some people found some nice entries into that. Where we could go now, I do think this 1960 level is still a level that we have to watch out for. As you can see, there was a pretty emotional response off of this level. So if we do come back up, I could see that being another short opportunity. With price pushing where it is right now, again, with the ADP data that we just got 30 minutes ago, that also does not help this situation right now, showing that we are kind of much worse off in the economy. So could we come back down in base? Yeah, we absolutely could. We could kind of do one of these with the coming response to the market from the retail trader. We could base along this same level where we've already had buying. And then what we could do is we could actually continue to short down to the 1896 level. And again, that kind of goes what common belief would be. But again, everybody that's trying to get long gold right now, again, that's what happens is you take money from those guys first, you buy it on sale, and then it pops back up again. But I think actually for the rest of this month, I think people need to be focusing on gold long with any mention of additional stimulus checks, how fast they're coming, any type of additional programs. All those things are gold positive, obviously.
Yep. So let's take a look over at the Nadex platform on gold. And it's there's a lot going in here. There's some negative news on the economy, but there's for gold with that stimulus coming out there and looking as an inflationary measure, you would see support in gold, and there are a lot of people that are still looking for opportunities to buy it. So whenever it does dip down, I want to point out, you're right, up at that, it was roughly 1960. We've been talking about this for a while. It got right there, and it was a short opportunity. So hopefully, if people were paying attention, they were able to take advantage of that. Down below, there's that 1930 level that I know you were talking about, and it's where buyers have stepped in. You saw them step in once, and the sellers came in again. So we've definitely right now, I mean, there's pressure on gold, but knowing that there are people looking to buy, there will be opportunities for short-term trades. Whether you want to do that in a Delta One product like this is a knockout where you could just trade within this range, and you've got defined risk, defined reward. You could trade it in between. I mean, there's some knockouts in here where these levels are right in the middle of that range, and you're not thinking about decay that you would have on a call spread. It doesn't trade like probability on a binary. It's a pure price play. Hey, do I think it's going to bounce from here? I can buy it. If it goes up, I can just sell it. If it gets up to a level where I think it's time to short and take a short position, I could sell it. I mean, if you sold when it was up here at the 1960 level, again, it's defined risk. If you're wrong and it goes higher, you're stopped out above just in case, because we're not sure. There is a lot of an emotion going into gold at the moment. All right.
And don't forget, too, we have FOMC meeting notes today. If you want to flip back, I can show back to the news part of it, and then we'll switch over to one of the indices. Obviously, the unemployment data came in bad. Not good when they expected a 60,000 positive employment change. And again, these are private jobs. This is not the actual non-farm number. That'll be on Friday. This came in losing, again, not getting 60, losing 123,000 jobs. Not good. Again, that will also further the additional stimulus checks, realizing that we are worse off than we are. Now, with that said, again, with gold as well as the indices today, you're going to have to be extremely careful because of this FOMC meeting minutes, okay? Anytime you have FOMC notes on Tuesday or on Wednesdays, they have the potential of really moving the market a lot. Seeing a Georgia election, they'll know where that goes by then. They've seen this unemployment number at this point. They know what the effect of stimulus checks were. They have different gauges. They've already made many statements in the past about being more things, letting rates stay extremely low. All of these things thus far that they've mentioned have been, again, more dollar weakness-based statements. All of those are also positive for gold. So, again, in this kind of line, what we just talked about, we were talking earlier this week about the top end, the ceilings of those knockouts. The floors may be what we should be looking for today. If price can come down to there before FOMC meeting notes because of the overall kind of negative tone of things, that's where you can all of a sudden get a pop in and a nice little burst to the top side. So again, knockouts may not be the best for that one, but again, be looking at your binary, see what the premium is in there. In regards to the indices, they're going to have kind of probably the same trajectory today. You can see at least the NQ. I've put a couple levels in here that if price comes up again, losing 123,000 jobs, not good.
Right.
Getting additional stimulus obviously is a booster for the market, but I will say one thing. Again, we mentioned it kind of yesterday. When one party has both houses, they can kind of dictate what they want. The policies that have been talked about are not necessarily the most Wall Street friendly. So, again, overall, with the negative, the negative kind of news this morning, FOMC again probably talking about stabilizing the economy, stimulating the companies that and supporting the companies that need it, giving another stimulus check, supporting that, or fronting the bill for that. All those should be positive for the overall economy. But the question is, what they say isn't going to be enough to combat, again, 123,000 people, losing their jobs basically in the last 60 days or last 30 days.
Right, so, and that's the broad-based stuff. Then there's the election, the knee-jerk reaction at the moment from it appearing as though the Democrats may take control of the Senate as well. I think the market, particularly with Nasdaq, with tech stocks, I think the initial knee-jerk reaction was there's going to be more regulation and more taxes on these tech companies. So there was this emotional sell-off to begin with, and I think some buyers started to step in. But what do you think as people continue to digest some of this?
Remember, a lot of this, here's where we are right now at 9 o'clock. If we go back just 12 hours to where we're dealing over in this level where we had some basing, this is where we started to get some of the results. And the overall, our market as well as overseas markets all started to tank. So a lot of the big business and big money started getting short up here around 12,715. When it came back down here to 12,500, this is a psychological level. It had zeros here. Right. Everybody knew it was pretty close. All the people that sold here, they're not going to hold it for it to go to zero. That's just not how it works. But it's called profit taking. When everybody starts, again, remember, for you to get out of your position when you're short, someone has to buy it from you. So it gets down the levels and it becomes profit taking on a short. Just like how when we buy, eventually it turns. This is profit taking. So a
Right.
lot of this could be profit taking right now. And again, what it does is it's, for lack of a better word, it's kind of jerking the retail trader around because they see, oh my God, it's super, super negative. I need to start getting short. And then when they start waking up and start getting short, it goes long. It's like, wait, I mean, how did the market know? And then
Right.
up here, when they're hitting their stop losses, it turns and it rolls back down again. So depending on where we are, like I said, I think there will be a pretty interesting response right off the bat. And then again, once Georgia becomes confirmed,
Right.
there will absolutely be statements that Biden said yesterday or 2 days ago. If Georgia is flipped, we were definitely we're going to be doing those $2,000 stimulus checks. That should help everybody in all the markets. They should all pop off that news. So again, FOMC supporting. If we can get down to this 12,500, that psychological level, we know that at least even this morning with all the emotions, we've had a pop. Could be an interesting place to bounce off of something later. And again, use a limited risk option on that one to be able to either take that
Yep. In
higher
fact,
from lower.
I'm gonna take us over. I mean, this is one way. These are the daily binaries in the Nasdaq, and indeed, we've had this level, this 12,640 level as a shorting opportunity. This is where the market stabilized overnight.
Yeah.
I mean, it went down and then it kind of came back up into this range. We're seeing it as a shorting opportunity. I mean, this here was probably profit taking.
Yeah, it's just way too much emotion. And then, I mean, it bounced in an area where we had seen buyers in the past. So it made sense that they knew that's where profit targets were.
Yep.
But again, this is in the middle of the night. So that global section movements don't necessarily weigh as much.
Really, it's there is this 12. I mean, it's right now we're selling off again. We're just over 15 minutes away from the open. It's definitely got some negative pressure in the tech stocks. So I mean, there are plenty of binaries. I mean, for the day, I mean, this is going to be going through multiple binary levels today.
Mm-hmm.
This would be probably a good day to trade binary options where you are controlling your risk. Everything is defined risk, defined reward. You know it. Getting in, what you could potentially make, what you could potentially lose. And again, as it moves, the volatility, the probabilities will change. As volatility increases or decreases, these probabilities will change, but there will be opportunity to day trade these binary options as NASDAQ is moving around. And right now it appears, I mean, it definitely had some negative pressure with the initial election news coming out, some profit taking, and quite frankly, probably might be looking for some additional pressure when the market's open. Interestingly enough, and I want to share this quickly.
Actually, can you switch back real quick? I'll take 10 seconds of your time.
Yes.
I just want to show. So again, the blue line right now on my screen is that 12,500 area that I was mentioning before. One thing I want to point out is if we look just a little bit lower, you can see there's a level approximately at 12,466 on mine. Your may be slightly different, but you can see there's an area here that we had marked off that we had 1 touch, 2 touches, 3 touches, and every time it says touch this level, it has popped. The reason I'm telling you guys is because one of the most common strategies for people to trade is support and resistance. People see this and they say, oh, okay, well, here's our support. As soon as it breaks this support, I'm going short. Guess what's sitting right below it is a little bit of a trap sitting right about here, about 50 points lower. So don't be surprised if we do see a pop through and it actually turns a little bit lower. Again, time this with FOMC today if you can.
Right. That's excellent. So there are definitely some levels there to be paying attention to in NASDAQ. I would expect to see some volatility there. I just wanted to share the other side of the coin, which is rather interesting, just because I want to point it out. If you're not familiar with the Russell 2000 indices, Russell took the top 3,000 stocks in the United States. The top 1,000 made the Russell 1,000, very similar to the S&P 500, same 500 plus the next 500. The Russell 2000 are the bottom 2,000. So it's the small cap stocks. And oddly, what happened with the election news is it's done the exact opposite. As people as the markets initially interpreted the tech stocks and some of the more broader market stocks with taxation and regulation, they got hit. They all sold off, and then there was some profit taking with buyers stepping in. The Russell on the news, it actually rallied. So this one went the exact opposite direction. The Russell 2000, the small cap stocks, rallied on the election news, and they hit profit takers who started selling. That if we're going to see divergence in some of the U.S. equities. It's something to be watching where if the techs in the broader market might be selling off, you actually might see some support in small caps as people go through sector rotation or market cap rotation. Something to be paying attention to. I just thought I'd point it out because it's doing the opposite of the other indices in the U.S. Brian, is there one other thing you wanted to share today before we let everyone jump away? And I mean, how's it impacting any of the currencies?
I would say, I mean, right now on the currency basis, not too much right now. Everything is more or less. I mean, it's kind of moving what it should. There was early movement, but right now in the last 20, only thing moving really is the Australian dollar. It's up 69, and that's what I just screened. We're seeing it kind of roll over. Actually, that's oil, so we'll go back from there. But you can see in the last couple of hours, the Australian dollar has really turned and kind of rolled back to the downside as well. And again, this could be profit taking. There's been so much push forward in both of these pairs, both the Aussie dollar and Aussie yen. But basically, it's a proxy for gold. The last thing I was talking about was oil. Oil is up in that area, guys. I don't know if you saw it yesterday. We mentioned it in the longer presentation. We popped through that area a little bit, the 50.20 to 50.66. And but again, now we're starting to see lower lows on the pullback. So oil could be an interesting play today as well with, again, bad ADP numbers, less people working, less demand. Could be some movement there too.
Yeah, and, again, and the reason oil rallied was because you had Russia and OPEC both saying they're going to cut back on.
An oil inventory report at 10:30 today.
So yeah, so there's some things to be. There's a lot going on in the markets. I want to give everyone a chance to get ready before the U.S. Equities do open. So with that, I want to say if you have any questions for Nadex, please email us customerservice@nadex.com. If you don't have a demo account at Nadex, click the link below. Open a demo account, and you could do some practice trading in these short-term price action markets. Nadex has got some great opportunities with our binary options, our knockouts, and our call spreads. If you have any questions for Brian, you can reach him at support@keeptradingsimple.com. You can certainly email him. He is accessible to answer any questions. With that, I want to give everyone an opportunity to go get a fresh cup of coffee and get ready. I think we're going to see some interesting days in the U.S. equities as well as some of these other commodity markets. We'll catch you tomorrow morning. Good luck in the markets.